Good evening, everybody, and welcome again to our webinar series. This time we have Manfred Hübner from Sentix as our guest. My name is Dan Valko. I'm a IFTA Marketing Director, and I'm very pleased to add another interesting webinar to the series. Feel free to enter your questions in the special box that you see on your screen, and I will pick them up and relay later during the Q&A section. Thank you very much again for joining us, and Manfred will have the word very, very soon.
Yeah. Okay.
Yes, Manfred, it's all yours.
Okay, yeah, hello, good evening from Frankfurt. My name is Manfred Hübner. I'm Managing Director of Sentix. And yeah, thank you for joining this webinar. It is the first webinar we do from Sentix on this topic, and we are very glad and thankful to IFTA for this opportunity to present yeah, our theme, sentiment analysis, to you. We have in the next 45 minutes a very short but in-depth agenda. First, we will have a look on the sentiment analysis and we'll ask the question, what is that? What can we do with that? Then we will have a deeper look on the Sentix Global Investor Survey and how you can use it for your trading, for your research. And at the end, I will give you some links where you find more information about the topics for offline reading. So let us start with sentiment analysis. Why is it useful? I think if you think about sentiment analysis, it's a psychological concept. It is about the emotions of investors, the acting of investors in the market. We found the picture of an iceberg very interesting to reflect why is it useful. Because like an iceberg, people only believe what they see, but what we see is only a fraction of what's really happened in the market and what's influencing the markets. So it's the same like what we know. We only know 20% consciously, but we all know there's a lot of unconscious wisdom and unconscious behavior of humans. And it's the same with the market. Only 20% of all market movements can be explained rationally. There's a big research paper from Professor Schiller from beginning of the 80s where he done the research and found that you can only explain 20% of all volatility in the market by fundamental factors like dividends or other fundamental topics. So there's a lot of below the surface, below the waterline. Most things happen without our attention. This is on the, each trader has this, but it's also in the market. A lot of our thinking is unconscious. Human behavior is the one, what we found now from scientific studies, that explains much more of the market. Psychological concepts show that you can explain up to the entirely 80% which are not explained by fundamental factor, by psychological factors in the market. So it is very important for us as traders, as researchers, to dig deeper, to go below the surface and have a look on this psychological side of the markets. And why it's also interesting is that human behavior in aggregate is immutable. It has to do that it is deep coded in our genes. It is coded like in the way our brain works, and it hasn't changed for the last 10,000 years. So it is a source of alpha, when you want to explain with modern words, which is immutable, which will not go away even if you try to use this source of alpha in your trading. And yeah, at the end, it is worth to to have a look on this iceberg, even in terms of trading, it has to do that don't be the captain of the Titanic, avoid to be the captain of the Titanic. You could be one if you are not aware that most of the important market factors are below the surface, are below the waterline in this psychological behavior of markets. So sentiment analysis deals with the fact that we want to measure the psychological side of the markets. We want to measure investor sentiment and want to get at the end signals where we have to invest, where we have to avoid investments, etc. So sentiment analysis is the way how we do it, and we do it in a certain way with certain indicators. We have a look in sentiment analysis on the investor sentiment, but not on the sentiment alone. We have also a look on investor behavior. And most people underestimate the fact that these are two different things. They have not a sense that behavior and sentiment might not be the same. And we often find that investors are bullish or bearish for a market, but they are not entering the market like their emotions would tell them. Sentiment, you all know it, fluctuates between greed and fear. These are the most prominent extremes in the market. But when you have more experience with sentiment analysis, you will find that greed and fear are like black and white. These are the extreme emotions. They are interesting emotions, but the shades of gray might be also interesting. Most people use sentiment analysis to employ the idea of contrary opinion. At this point, we want to highlight that most people think contrary opinion means selling a market on the top and buying a market on the bottom. At this point, I only want to tell you contrary opinion is nothing like that. Contrary opinion means to know where is the majority of people, what's the idea of the majority of people, and to find out what is this majority, and then to form an opinion which is different from that. And sometimes it is a very contrary thing to follow a trend. Think about in interest rates in the last 10-15 years. Most people never could imagine how low interest rates will go, and they expect, many analysts expect rising interest rates year over year over year in the last 10-20 years, and it was the contrary opinion to go long the bond market even despite the fact that interest rates were still so low. Yeah, and last but not least, we do sentiment analysis to better explain how financial markets work. It is what I said before, only 20% is explained by classic fundamental research. If you employ the idea of sentiment, you can much better explain how financial markets work, and if you can better explain them, you can make better forecasts. So what are our goals? Our goals when we do sentiment analysis, first we want to improve timing, and I will show you later that indeed we can improve our timing. We can get much better entry and exit signals, especially in strong trends. We want to spot opportunities against the crowd. That's important, not against the market. We want to spot opportunities against the crowd. And last but not least, we want to reduce our risk in trading, and we can do a lot of risk reduction if we avoid the pitfalls of an emotional trading. So most errors we do in trading are because we are also optimistic when others are optimistic, and we become bears when others become bears. But when I have a certain feeling for myself, I can have a look on the sentiment side, on sentiment indicators. When I see the others share the same emotion like I do, then it might be a good idea to think twice and to find a contrary way to this emotional trading. So when we know what we want to do, the question is how can we measure sentiment? How can we employ sentiment analysis? The problem is that emotions are not observable directly. We only see, we can only see how emotions have us affected or have affected other investors. So it is never possible to measure it directly. We also always have to use a derivative of the original emotion. Most of you might know some sentiment indicators. There are some well-known sentiment indicators out there, like the VIX, the volatility index, or like put-call ratios and this one. I will have a deeper look on these indicators in short. The problem with these sentiment indicators is, in our opinion, that most of them do not reflect sentiment. And this might surprise you because these indicators are well known as the best sentiment barometers, but you will see that there are some problems with these indicators. So have a look on them. The first I want to look on is the VIX, the volatility index, which measures the implied volatility in the option market. In this example for the US equity market. So this chart shows you in orange the S&P 500, the blue one is the volatility index VIX. What this indicator measures is the demand for protection. So if this indicator rises, it means options become more expensive. So it has nothing to do with rising or falling markets. It has to do with are people thinking the market is so unsecure, it is so risky for them that they seek protection by buying options. And when a lot of people buy options, volatility will rise. Typically, it is associated with falling markets. You can see it here, 2008, 2009, the VIX shot up in a falling market. But you can see first it is correlated with a falling market, but you see at the real deep or real low in the market in 2009, the volatility index was not so high like it was in 2008 in autumn. And if you bought in autumn 2008, you have experienced a lot of losses in the market. So this indicator is very difficult to trade because this indicator has no stable boundaries. Whenever you look in the market, sometimes the highs are in the 20 region, sometimes in the 30 regions, and sometimes even in the 80% region. So when is the point you enter the trade? You only know it in hindsight. And that makes it very difficult to trade. The other problem is that when you look, for example, the period in 2007, you see that this volatility index rises sometimes with a rising market, because sometimes a rising market can also be a problem for investors, and they seek protection against rising markets, and then this indicator reverse in the meaning, so very difficult for you to trade. And also have a look on the bull market for the last 2 years. It is absolutely meaningless, this indicator for the bull market. This indicator fluctuates very heavily and it has absolutely no influence really on the market. So that is why we come to the conclusion that the VIX index is not a sentiment indicator. It is an indicator which reflects demand for protection. It might be sometimes interesting to know this information, but it's very hard to trade with it. It's very hard to time the market with it, and at least it is not sentiment. So another indicator which is very popular in terms of sentiment are the put-call ratios. You see in this chart in orange the put-call ratio for US equities and the S&P 500 index. The first thing you see in the chart is that it is a very volatile indicator. This indicator, to interpret the signals, assumes that pessimists trade more puts. That is the logic behind this indicator. So if the put-call ratio is high, it means more puts are traded, and it means more pessimists are acting in the market. What we think is sometimes you get very good signals. I point something out in mid-2014 where you have a very high put-call ratio which is correlated with a low point in the market. But it's not always the case. There are many lows in the market or highs in the market which are absolutely no correlated with any meaningful high or low in this indicator. You can see here some examples where you can see that it's very difficult to get a signal from this indicator. And it has to do that there is too much noise in the put-call ratio. We have trading every day in calls and puts for various reasons. Not only the pessimists trade puts, sometimes an optimist might also trade a put if he is a seller, for example. The other problem is that in some markets, especially the German market, for example, the put-call ratios are now completely distorted because we have so much structuring activities in derivatives which has an influence on the trading of options in the market, so these indicators distorted. And the biggest disadvantage at the end is you can have a good put-call ratio for the US equity market, for example, but you have no equivalent, for example, for the US bond market. You have no equivalent for other markets in other countries which are not distorted, for example, like the German equity market. So at the end, it is a sentiment component in the put-call ratio, but we think it is too volatile, too much noise to have really good trading with this indicator. Other people think about the commitment of trader report, the positioning data, as a useful sentiment indicator. You see in this chart an example of the Brent oil future in blue. The orange one is the position of the non-commercial investors in Brent oil. In some markets, especially in FX and commodity markets, COT data is helpful. And it is therefore helpful because it is not a sentiment indicator, but it is a leading indicator for the market. So typically, in positioning builds up in the bull market. So with rising positioning, you have rising prices. And when position reverses, then typically the price will also reverse. And if you are lucky enough, then sometimes the position build up is a little bit ahead of the price. So typically, positioning data might explain a trend, gives you an idea if a trend is evolving, but it is at the end not a sentiment indicator at all, at least because it has the same disadvantages as the VIX index. It has no clear boundary where's the top or the low in this index. So for example, in 2012 we have 150,000 contracts in the Brent associated with the top, and in mid-2013 we have 250,000 contracts which were needed to form the top in the market. So at the end, when you have no clear boundary, you have no advantage of this indicator over price in terms of decoding if there's a bullish or bearish sentiment in the market. So forget this index. The COT report is also not a sentiment indicator. The last one I want to have a look on is the AAII survey. And this, at the end, this is a sentiment indicator. You see this orange line of the AA survey, the bullish percentage, the bulls percent line, and in blue the S&P 500. And what our experience is that sentiment is best reflected by survey data. It's by far the best way to extract the sentiment of the market. And the advantage of these indices, of these sentiment indices, is that you have clear boundaries. You have clear upper and lower boundaries. You can define levels where you have an idea if there are too much bulls in the market, or are there too much bears in the market, or a lack of bulls in the market. That's a very important factor of a sentiment indicator, that you can define such levels, because every indicator where you cannot define exact boundaries is useless for you in your trading. The problem with these surveys is that you have no transparency who is participating in the survey. How are these numbers derived? So with the AII, you know there's a web survey, but you have no idea who is participating in this survey. In which way are these numbers collected? Is the population changing? Are these always the same investors, or are there always different investors? So the consistency of such a survey is also a problem. Are the people were asked? So these are some problems in the market, but at the end, it is by far the best way to extract sentiment. And if you want to gauge the quality of a sentiment indicator, you should have a look on some aspects, some properties of sentiment indicators. These properties are cyclicality. So a sentiment indicator fluctuates consistently between greed and fear. It doesn't stay for weeks on one end of the range. So if you have, for example, an indicator which is called a sentiment indicator, and this indicator stays for 10 weeks on the upper boundary of the indicator, it is not sentiment. Sentiment is not behaving like that. Sentiment has a correlation with price. So when you see a sentiment indicator which is completely disconnected from price, you can be sure it is not a sentiment indicator. And what is also attribute of quality, extreme readings in the indicator should be associated with extreme times, with extraordinary times in the market. If you have an indicator which shows you a very extreme reading in a very calm market without any news, you should think twice if this is really a sentiment indicator. So when we sum up what we have learned about the sentiment indicator and sentiment analysis so far, we can say the popular indicators, most of the indicators we all know and we are used to use in sentiment research, have the problem they do not reflect sentiment. They lack the typical sentiment pattern, which means they might be useful, but they reflect other information, but not sentiment. And sometimes they might be useful, like the put-call ratios, but are very noisy, and action points are only visible in hindsight, which means they are interesting to explain, but without practical use. Survey-based indicators are better in our work, but the problem is they are available only for selective markets. For example, the AII index is only available for the S&P or for the US equity market. If you want to compare it with the equity sentiment in Germany, AII has nothing to show you. It is therefore not comparable between markets, which means you cannot do any inter-market research with these indices. You have a lack of transparency, and yeah, you always have to ask yourself, do these indices cover a relevant investor base? The AII, for example, covers American individual investors, but what is with institutional investors? What is with institutional investors outside the States? So these are questions, and That's why these indicators are better but not good at all. And that is why we come to the idea to invent sentix. And sentix is a complete new approach in sentiment analysis, which tries to solve all the problems we've seen so far with sentiment research. So at this point, I'd like to introduce the Sentix Global Investor Survey to you. First, some facts and figures. Myself, I introduced myself. My name is Manfred Hübner, and I founded Sentix in 2001. So it is now 15 years old, this project. And what is the special attribute? I am a fund manager by myself, and I invented it from the perspective of an investor. I invented it to solve the practical questions we have day to day in investing in our asset allocation. This is my team. Sentix grown over the years, and we are now 6 people, 6 colleagues working on this project, and we have achieved some interesting milestones. Sentix is now the leading sentiment survey already in Europe. There are currently over 5,000 registered investors in the survey, and from them over 1,000 institutional investors, which means this is a relevant investor base. We have over 1,000 respondents each week, which means that all data we collect is statistically relevant and without any errors by mistyping in the survey, etc. And we have over 400 different indicators. And I will show you a little bit later what does it mean to you in your sentiment research. First, let us have a look on who is participating in the survey, because I think this is very important. As I mentioned, about 1,000 institutional investors are registered, which means these over 1,000 investors, we know them, that these have an institutional background, and these investors alone represents over 500 billion euros in assets under management. So this is a very relevant group and comes from all institutional areas like asset management, analysts and traders in this institutional camp. The others are individual investors, so these investors are not checked that these people exist in their space they told us, but from their own classification we know that from the overall 5,000 investors, you can say roughly 1/2 has a typically individual background, comes not from the financial industry, comes from other areas, and the other half has a financial background, and from these other half, 1/2 is classified as an institutional investor with where we know what is the profession, where are they working, etc. So this is a very relevant investor base, and the interesting point is, if you like, you can join this investor base, you can participate by yourself, and this is always the best way to learn more about what Sentix can do for you. As I said, that we have over 400 indicators, and I mentioned that the problem with other sentiment indicators is that you have a very interesting indicator, for example, for the US equity market, but you have nothing you can compare it with the developments, for example, in the European equity markets. You cannot compare what does this equity move mean in the United States for the US bond investors, for example. So it's very difficult, and it's very hard for you if you want to do consistent intermarket research. Sentix has the advantage that this project has a much broader focus not only in terms of investors participating, but also in the information we derive from the survey. We have information for all important regions, for the US region, for the European region, for China, for Japan. So it is not only focused on Europe or on the United States, for example. And within these regions, it focuses on all asset classes, on commodities, on equities, on interest rates, and on the FX market. And you can have from one sample size or from one survey, you get consistent information for all these markets in the same point in time. And you can compare developments directly. You see, for example, if in 1 week investors become very pessimistic on equities, you can see, are they becoming optimistic for interest rates or not, for example. And we do not think in sentiment alone. We think much broader. We want to cover every aspect of what people perceive in the market. So you have a lot of additional information about the positioning in the market, about which investment styles are preferred, what is going on with equity sectors, or an indicator which becomes very popular for obvious reason in Europe, the Euro breakup index, which is the only index in the world which gives you a quantitative measure how likely it is that the Eurozone will break up. And all this is completed by our own economic indicators. So we have our own set of economic leading indicators, which means that you can see in one point in time that people, for example, become optimistic for the economy in Europe and see what does this mean for investors in the equity market or in the bond market, or does this change, for example, the preferred styles people employ in their portfolio. So it is much broader a set of information, which means that we have very deep insight in what's going on in investors' mind and what's going on in investors' portfolios. So how does it work? I said the biggest advantage of sentix is that if you like, you can participate in the survey by yourself, and it's the best way to contribute to good data and to get something out of it. So it all starts that the investor who wants to participate register online on our website, and then he becomes every Friday an email from us when the survey opens with a link and is asked to complete the survey form by an internet web form. The survey closes on Saturday, so it's a very short window when we do this survey. We then process the data, and all participants receive our report about the results on Sunday evening in German and during Monday in English. So Friday the survey starts, and Monday on the latest you have the information. It's very quick, very fast. It means it is an almost real-time information. Data is available at the latest on Monday morning. So if you have a data license and want to download the data, you have the data ready before trading starts on Monday morning. This is the sentix Global Investor Survey cycle. It runs every week. So it's the same procedure: Friday mail, Sunday you get the results, the data you have latest on Monday morning. Think about all the others, you know, commitment of traders, etc. They take many longer or much longer to process the data. Sometimes you have the data you get is 1 week old before you have it in your hand. There we have a much a big advantage over the other sources that we have such an quick response. And yeah, you have a lot of incentives when you participate in the survey. You have access to all this data. You can chart everything on the website, have a look on every indicator like you want, and you also get free reports, free commentaries from us, all with your own participation in the survey. So everything is free as long as you use it for your private individual use. You participate in the survey and get all this information without any charges. what does it make very interesting? So how can you profit from our data? First, we have to think about where could we find alpha in the market. You could find alpha in the market from something like called the wisdom of the crowds, because it means a lot of heterogeneous group of independent investors knows more than a single investor. And if you can extract this information out of the data, you have an information advantage, because you know in practice everything what the market knows. You know everything what makes the rational behavior of investors. And typically our economic indices are one set of data which reflects this wisdom of the crowd. But on the other hand, we know sentiment is there is emotion in the market, and on the same time people can know something, but if they are in an emotional state of greed or fear, then this emotional thinking dominates the rational factor. And if you want, and it leads to a phenomenon called the madness of the crowd. And the madness of the crowd is spotted with the classic sentix sentiment index, for example. So that is interesting, that you have the same, or that you have two different informations from the same kind of survey. You get everything what knows the market, and you also see what is the emotional side. And last but not least, you can get an idea where black swans might lie in the market, and these black swans typically have to do with herding behavior, have to do with extreme position in the data, and for that, for example, we have indicators like our position index or our overconfidence index, which reflects such risk factors. So that is a very brief description about the three sources of alpha. In the next minutes, I will concentrate on the madness of crowd on the sentiment side of in our data. So as I mentioned, we have our own set of sentix sentiment indicators, and you see this chart here is the sentiment for the German equity market, for example, and you see that this index has the classic behavior I told you before. It has a cyclicality, it has a correlation with price, and it has clear boundaries, upper boundaries, lower boundaries in extremes. On the other hand, we ask our investors not only about their short-term expectations, which form this sentiment, but we also ask them about their medium-term expectations. And the same investor, which might, if you look on the chart on the left chart, the latest point, you see sentiment is very low, so people are fearful. But on the right, in the right chart, the same point in time, you see that the same investor is medium-term optimistic. And this has to do that the left chart reflects sentiment, and the right chart reflects the wisdom of this investor. So in the same brain, if you like to name it in that way, you have in one brain, in one point in time, you can have two different states. You can have an investor which is bullish medium term, but is very fearful, for example, in the short term. And this, if you have this information, then you can combine this to a very interesting indicator. We call it the sentix time differential index. And this is, in our data, we think our best indicator for tracking sentiment in the market. This index is the difference between the two charts I showed you before. And you see in this chart that you have very low readings like you would expect in low points in the market, and you have high readings and high points in the market. So this kind of indicator everyone wants to have from a sentiment indicator, that you have the extreme numbers and the extreme points in time, and that you have in the important lows in the market, you have low readings. So this indicator, for example, shows you what you can get out of the sentix sentiment indices. This is the time differential index, and what I explained to you, we have put it in a short statistics, and we have do a calculation where we have calculated the different indicator values and the performance in the future. On the left hand side you see the indicator values from minus 0.5 to plus 0.4, and then the performance of the German market up to the next 16 weeks. And you can see from the colors that if you have low readings in the index, you have positive numbers in the market, positive performance, and if you have high readings in this indicator, you have a negative performance in the market. And that it makes it interesting, and it shows that sentiment can bring a lot of interesting aspects into your trading and gives you better orientation whether to buy or to sell a market. So I will, due to time, I will skip a little bit. This presentation will made available to you after this webinar, so you can read everything by yourself and have a deeper look on the charts. What I want to show you is a comparison of our sentiment, for example, over the put-call ratio. I mentioned before that the put-call ratio has the problem that it's very noisy, very volatile. The chart I show you here is the S&P 500 in blue. The orange line is the put-call ratio, like I showed it before for the US equity market. And the green line is our sentix sentiment for US equities. We have inverted this chart to be compatible with the put-call ratio, which means low readings in our index means optimism in the market, and high readings means pessimism in the market. And what you can see if you compare our index to the put-call ratio is, first of all, much less noise, much clearer upper and lower boundaries, much clearer signals overall. But interestingly, when both indicators are in sync, then you have very strong signals. So when you have a high reading in the put-call ratio and a very pessimistic sentiment by sentix, then you have a very good chance that the market is near bottom. But have a look on mid-2013. There we have an important low in the market, and in that time, mid-2013, our sentiment shows that there is a lot of pessimism in the market, but in the put-call ratio you do not see anything meaningful. So that is why we would emphasize that put-call ratio might be distorted, is not by far not the best sentiment index you can have. You can see from our sentiment index that you can have much better signals for the US markets than the put-call ratio. And it's not the lows in the market, but the tops in the market as well. I will skip this with the sector performance due to the time, because I will give you some time to answer some questions you might have. Before we open the questions, I will show you where you can find more information if you want to know more about sentix, or even if you want to participate by yourself. First, we are on the Bloomberg, so if you have a Bloomberg terminal, go to the sentx page where you can find information about the data, or go to sent.go, where you can find research reports, sample reports from our work, and you get all the addresses to get in touch with us. If you have no Bloomberg terminal, go to sentix.co.uk. That's the web page where you find more information about sentix, where you can register to the survey if you like, to join the survey and to participate by yourself. Because that I want to reflect again. The registration is free. All you have to invest with sentix is every week 5 minutes of your time to fill out the web form, to fill out the survey. And for this small effort you have to do, you get a lot. You get free sentiment report in English every week. You have a huge compendium available, which is currently in German, but will be translated into English as well. You have a lot of other resources available, a lot of additional reports we publish in English as well every week. Everything is for free. And you have access to the charts of all indicators. So when you participate in the survey, you have access to this information with a very small amount. With one exception, everything is for free if you use it for your personal private use. If you want to use it commercially as an analyst, or if you need to download the data for your publishing, for your own models, then you need a business license for this material. But for as long as you use it privately for your personal use, everything is free, and I think it's a lot you can get out of it for a very small investment. Yeah, to come back to the picture on the beginning, to this iceberg, sentix might help if you look for really high quality data on investor behavior. It is by far the biggest database of investor behavior in the world. With a big investor base, you can benefit from the wisdom and the madness of the crowds reflected in the data. You can spot risks much earlier. It is beyond the scope of this introductory webinar to show all aspects of the indicators. If you are interested in that, be in touch with us. We are very keen to answer all your questions and to help you to get the best out of the sentiment indices. And last but not least, if you want to move away from the mainstream, you have to know where the mainstream is. That is the only way to move away from it. And sentix sentiment is by far the best way to get this information where the mainstream really is. So thank you very much so far for your attention. And yeah, I want to give the microphone back to Dan, and we are open up for your questions.
Manfred, thank you very much. It has been a great presentation, and I bet that many of the people will join your site and will take the benefits of it. I have a question here from a gentleman from Dirk, and he's asking, I would be interested in a neuro, sentiment and trend analysis.
We have, I can switch if we have this.
Yes, you are still on there, so.
I switch to the Bloomberg system,
yes,
for example. And if you want, for example, to know what is the sentiment for euro dollar, we have every indicator has a code, and it's the SMTM, which means sentiment, EU for euro dollar, and H1 is the sentiment from all market participants for the euro-dollar exchange rate. And you can see here in this chart that we have 2 weeks ago, we have a very low reading in this indicator, a very bearish sentiment, and yeah, it was the starting point of the current stabilization period in euro-dollar. Yeah, for example, so you can have this information. You have the sentiment, you have, but also the strategic bias, which, for example, might be interesting for this investor too. If we have take a look, for example, on the positioning side on euro-dollar, this chart shows you in blue the euro-dollar line, the euro-dollar exchange rate. And the orange line is the positioning of investors in euro-dollar, and the green line is our medium-term expectations index. And you see that our strategic bias, we call this green line the strategic bias, you see that the strategic bias and the positioning are very highly correlated typically. But the green line is ahead of the orange line. And when you see, like in 2014, that the strategic bias is falling, then you know that there is a risk, a rising risk that euro-dollar, the position in euro-dollar will at the end follow this strategic bias, which is very logic because first you have an idea if something is too dear or too expensive. And then you start building up the position, and then the price will follow. So the huge decline in euro-dollar comes not of a surprise if you see this indicator by sentix, the green line, that it is still falling long ahead of the positioning. Then the positioning starts at the end to adjust, and then the price follows at the end. So these are two examples, our strategic buys and the sentiment indicator I showed you, which are useful for investors interested in the FX market in euro-dollar.
Yeah, good. I have a question here. What about the DAX? DAX is going higher and higher, or it went higher and higher. Can you show us a chart about the sentiment in DAX?
Yeah, sure. Most people think that if sentiment is high, the markets have fallen. I showed you the example of the time differential index. We have a look on both sides. We have a look on the sentiment and the strategic bias. And the best point in time to buy a market is if people are on a medium term convinced that the market is too cheap, that they have to buy, but for any reason they are in the short term very fearful. And this situation is reflected in the time differential index. When the time differential index has a low reading, it means that we have a lot of good strategic bias and a lot of bad sentiment. And we like if a market has low readings in the time differential value. I have a setup for the DAX of this time differential index. This is a very volatile number. I make it a little bit higher, and you can see. Can you see the crosshair?
Yes, yes.
The crosshair is the zero line, and you see at the end of the chart that the time differential is below the zero line. And it means that this market is not in danger at all, because this market is supported by a very solid strategic bias, and there's too much short-term fears in the market over the very solid strategic bias. So as long as the time differential is below the zero line, we not have really a big issue in the market for we might have a small correction, but not a trend reversal. Have a look here, for example, in end November, we have very high readings in time differential, and then after that we have 4 weeks of consolidation in the market. That is a much better point in time. But when we have so low readings in the time differential like we have at the moment, we have no signs, at least from the sentiment side, that we are in real danger. We expect the markets to move higher at least until end of May.
Okay, interesting. There are different measures there are different indicators to measure sentiment and similar things. One that I would like to address here is the percentage of stocks above or below the 200-day average. This is an American indicator which is quite popular, and I'd like to know whether you got in touch with it, and if you can compare it with sentix sentiment indicators.
I have that chart, this indicator not ready, but from a statistical point of view, such an indicator might be useful, at least if you think about that markets are mean reverting in some extent over time, against the inherent trend. But we found it very hard, for example, we do a statistical test, for example, and measured the deviation of the market from, for example, the 100-day moving average.
Yes.
And you see from the statistical point that when you move away over 20% from the average, then you have a statistic which clearly shows that the market on average will revert to the mean and has negative returns over time. But there are some periods where this deviation from this index deviates up to 40%. So there's no really a law that prevents a market from rising further, even if it is overbought. And that's the same with the indicator you measure. Most of the time, when you have only a few markets, a few stocks of a market in an uptrend, it is a bad sign that the market might correct. That's the typical assumption. But have a look on 1998 up to 2000, when the tech bubble was evolving. This trend over 2 years was driven by a handful of stocks. So if you have a look on an indicator like you mentioned,
yes,
it gives you completely the wrong message, because you not understand what the market is really driving. You have the wrong idea, the wrong concept. So these indicators might be useful for statistical traders, but they not explain sentiment, and they are not necessarily explain what's really going on in the market. What we want with sentix, we want to discover what is the driving force behind the investors. And we want to get an idea, are these investors focused on a certain theme, for example, which explains what's going on in the market. That is why we have, for example, thematic indicators. We have indicators which explains what is going on in the market, far beyond the sentiment and far beyond poor statistics.
Yeah, that's very true. Yes, your explanation was very, very correct. Another question: do you also have surveys related to individual stocks, more important stocks?
No. We have only survey up down to the sector level, but not on individual stocks.
Mm-hmm. Okay.
Sometimes when we have the impression that with a certain stock or certain theme something is going very weird, then we make an extra survey, a topical survey for this special situation, but this is not frequently done. It depends on our discretion. Typically we not have information on single stock level.
Good. Another question here about the SPX. Would you please give the same picture as for the euro? The person is interested in the sentiment related to SPX, to S&P 500.
The sentiment we have seen in the presentation. Does he interested in the commitment of trader and the strategic?
No, in your indicator. He is interested in how sentix looks at S&P 500.
The chart in the presentation was very up to date. So this is the current situation. This is the chart I showed you in the presentation. The orange line is the put-call ratio, and the green one is our sentix sentiment for the SPX. And you see that we are currently on a very neutral level. We have had a very bullish sentiment some weeks ago, where we also have seen the top. And since then we are in the consolidation phase, which is clearly not finished. It is finished when we reach a negative sentiment in the market, and it's still not the case. So this is, for example, a very interesting deviation, for example, from the AAII measure. When you see the AAII bulls, for example, you see the bulls are declining very sharply. And you could have the impression that there's a lot of pessimism in the US equity market, and which might lead to buying opportunity. We would emphasize that this is not the case. In our measure, sentiment is still slightly positive. It is more neutral than bearish, and it is not a good opportunity for a sentiment trader to enter the market.
Good. Excellent. Another question here. You take the sentiment of everyone, or you also take the sentiment of institutionals and the sentiment of the retail traders or the private traders?
That's the latest later is correct. For example, I go here for use equities, and then you can see what we have. We have sentiment for individual investors and institutional investors separately, and the headline number. What I showed in the chart here was the headline number, but we also have the individual and institutional investor numbers separately. In terms of sentiment, it is interesting to see that there is not much difference between the two groups. So in terms of emotion, both investors exhibit very similar patterns. But when you, for example, have a look on the strategic bias, then you can see a big difference between the two. And the institutional camp is much better in gauging if the market is too cheap or too expensive. So you can have an advantage in your research when you have a look on the strategic bias, that you have a look on the institutional number instead of the headline number.
Okay, good. A question from Greg. Do you track data for the Canadian market?
Currently not. At the moment, we are in a development of a new software for our surveys, and as soon as we have this software ready, which is during the year, the software will be ready, then every participant will have a survey targeted for his domicile. So a Canadian investor will have a focus on his Canadian markets beside the international big ones. And as soon as we run this new software, then we will have this data for the Canadian market too. But it will take some time, I guess half a year, until we are ready.
Okay. You mentioned that at the end of the week, the people who are registered to your site, they will get some kind of statistics report. Will these reports also include a kind of scan of the riskier or of the extremes, of the extreme situations in the market?
The reports we have two reports. I showed you here now the website. It is logged in, and this is how it looks after login for an English participant, English-speaking participant. Then you have here the sentix ASR essential reports, and I will open up one for you. And you have here a table in this front page where you can see all the sentiment across different markets, and you which is in this case the data error. Sorry for that. Normally you see the correct numbers of the sentiment over the various stage, and you can assume it is on the upper or lower boundary for this market. And also you have here charts and explanations and highlights of interesting points in the market. This report is done by our friends research doing these reports based on their own research, on their own sentiment research on our data. And if you are familiar with the German language, or even if you say, okay, I don't care about the language, I want to read the numbers, I want to see the charts, then you can also have the German version if you like, which has the same information. You have here the numbers of the sentiment, you have also the highlights of some data, but these are not necessarily the same highlights, because this report is done by ourselves. We highlight the things we think are the most interesting one. The colleagues from ASR highlights their own markets. So you can have both, if you like, the German view of the world and the view from outside of London. And both is free if you participate in the survey.
Oh, excellent. Okay, we don't have any other question here, so it's 5 minutes over, but not a problem. It has been delightful to have you here and to have your presentation. So I'm convinced that the people will register. I know already one person who did. He communicated here. So what else can I say? Thank you again, and good luck with the development of the software. And let us know when your software will be in place, the new software will be in place, because it looks that it will be a very, very interesting option to spread the news and to spread the knowledge of the sentix philosophy, so to speak.
Yeah, thank you for the opportunity, and if anybody has any questions or problems, feel free to contact us directly. We are always keen to help you, and yeah, we would be very happy if a lot of investors join this opportunity. As more people contribute to the data, as better will the results for everyone of us participating.
Excellent. Thank you very much again. Thank you all, everybody in the attendance, and we are looking to another webinar soon. So good night or good day wherever you are. Thank you very much again.